Hello. In December, the US Congress passed a major package of tax reform, the biggest reform since 1986, which cut income tax and corporate tax. Now, there's a particular focus in this package on the taxation of cash held by US corporates outside the United States. Because of relatively high levels of US taxation, a relatively small number of US corporates have accumulated large amounts of cash and liquid assets outside America in recent years, around about $1.4 trillion on one estimate. The aim of the reforms, by levying tax on those cash balances, is to encourage US corporates to bring the money back to the States and spend it, particularly on investment. Now, history and recent survey evidence suggest actually that repatriated cash is most likely to be used for things like share buybacks, paying dividends, mergers and acquisitions, and reducing debt. So capital spending probably isn't going to get a huge boost from this repatriated cash, but certainly there is likely to be a lot of cash coming back to the United States. A bigger economic effect is likely to come from the reduction in the main rate of US corporation tax from 35 to 21%. That's paid by pretty much all US corporates, and it certainly will make America a more attractive place to locate business and make profits. The package also cuts income tax for around about 80% of US taxpayers, although the benefits are very much skewed towards higher earners. The effects of this package are likely to stimulate US growth, probably not massively. They're also going to substantially increase the size of the US deficit, American public borrowing. And of course, there are risks with something of this scale. There are always going to be risks, and there are two particular risks. One is that injecting all this money into the US economy with a recovery that is mature, that's been running for several years, with the US economy accelerating unemployment at low levels, it could overstimulate the US economy, stoke inflation, and cause the Federal Reserve to raise interest rates more quickly. Second risk relates to the US deficit. This package is going to cost about $1.5 trillion US dollars to finance over the next 10 years. That's going to come from borrowing. So the federal government is going to be borrowing a lot more money, and as a result, the US government's deficit over the next few years is going to be at the kind of levels you normally associate either with a war or recession, and significantly higher than the kind of deficits that America's main competitor nations are running. Now, when you consider that bond markets are already getting a bit jittery about inflation pressures, you then have a lot more issuance of government debt coming down the line because of this reform package. There's a real risk that this does add to pressure in the bond market. So pulling it all together, I think what it means is we are going to see rather strong US growth over the next few years than we would have had without the reform package, a much bigger US deficit. I think the implication is that this stronger growth is going to come at the price of a greater risk of overheating and greater volatility in the US bond market.